Okay, so this session is about cost accounting, is on cost accounting. Cost accounting deals with estimation of cost of a product or a service and also to have a control over the cost. To have a control over the cost. If you take any manufacturing company or a service rendering company, they have to fix the price for their product or service. While doing so, they need the cost. Without knowing the cost of a product or a service, we can't go with fixing the price of the product or a service. Cost plus profit is equal to price normally. Cost plus price is equal to.
Sir, are you sharing your screen?
No, I'm not sharing. I'm just doing it. Wait. Is my screen visible to you now?
No, sir.
Not yet, sir.
Now, okay. So we can.
Sir.
Visible?
Yes, sir.
Okay. So cost is very much important for fixing the price of a product or a service. Without knowing the cost of a product or a service, I can't fix the price. Cost plus profit is equal to price normally. Okay. So we have to devise some technique or methodology or some kind of mechanism to arrive at the cost of a product or a service. And also we have to have some kind of strategy, some kind of tools, some kind of methods and techniques to have a control over the cost of a product or a service. Yes? Yes, madam, somebody saying something? Those who are not speaking to the class, please go on mute. Am I audible? Is it okay for you? The voice is okay?
Yes, sir.
Thank you, sir.
You can all hear me, right?
Yes.
Yeah. So cost is very much important, and the technique related to estimation of cost and the control of cost are very important to finalize the price of the product or a service. Suppose I'm not able to find out my cost properly, I'm overestimating my cost, then definitely my price, my product, the price for my product in the market will be more than the competitor's product or a service. Then obviously I may lose out my customer. If the same quality product is available in the market for 10 rupees, if I am ready to sell for 11 rupees, obviously nobody will prefer my product because I'm costly in the market. So in order to avoid that kind of situation, take another example, opposite, the other way around. I'm not able to estimate properly my cost of the product. I'm estimating very less than the actual. 8 rupees the real cost, but I'm estimating as 7 rupees. Then I have to sell in the market for a lesser price. I may be having a loss. So estimation of cost of product is very much essential to fix the price in the market. At the same time, I have to have a control over the cost. Control over the cost. 5 rupees the raw material cost means I have to spend only 5 rupees for that. If I'm spending more than 5 rupees, then I'm adding up some load to my customer, which customer may not be like it, which the customer may not like it. Okay, so I have to have a proper mechanism to have a control over the cost. Control means not reduction of cost. the proper amount of money to be spent on the various elements of cost. There are so many elements of cost. If you are paying a 10 rupee for a pen, what are the different costs involved in it? Anybody can respond? If you are paying 10 rupee in the retail shop to buy a pen, what are the different element of cost involved in that 10 rupee?
The transport cost,
Sorry?
Cost,
transport cost and the GST, everything will include.
manufacturing
It
cost,
may be fixed and variable cost.
Fixed and variable cost, okay?
so manufacturing cost, labor cost. lot of components.
Manufacturing cost and labor cost. How does manufacturing cost differ from labor cost? What do you mean by labor cost and what do you mean by manufacturing cost?
Manufacturing cost means cost of raw material actually.
So manufacturing cost means cost of raw material.
So
Okay, then,
manufacturing cost will have both the components, labor as well as the raw material,
okay.
both the component,
So
but
basically material cost
plus labor cost,
plus
Plus,
labor cost,
plus transportation shipment cost, profit
okay.
margin.
Profit margin is a cost or not?
Profit margin is not a cost,
Is it
which we have
cost?
retail
Above
price,
the cost.
retail price which we have paid, no sir. That profit.
No, profit margin is a cost or not?
It's not a cost, sir.
It's not a cost.
So direct and indirect expenses incurred in the cost, so we can
Okay,
include.
direct and indirect expenses.
Yes. So direct expenses, which is direct, the product which we are going to manufacturing, how much we spend. And the indirect expenses is comes under like employee benefits, in transport, all other costs.
Okay. Anything else? Indirect cost and direct cost. What is direct cost?
Direct cost, if we are manufacturing the pen, so the raw material purchased and the machineries use some oils or whatever maybe, which is
Machinery?
yes, machines per using some oils and any repairs like that.
The bring of machine to produce anything is a fixed
Yes,
That's
which we
all.
are maintaining. For maintaining some machines, we are paying some cost for that and all included for the direct cost in direct cost.
How come machine is a direct cost, man?
No, it's not a machine. For maintenance of machine, we are paying. So if something repair will happen, otherwise oil we need to change. So
Okay, what is direct cost according to you?
which we are spending for the production, manufacturing of the goods.
Everything we are spending for production and manufacturing only, no? Anything we are spending for recreation, nothing, no? Everything we are spending to manufacture and the production only, right?
See, sir, if you go for the department in the company, we have a lot of departments like in HR. So HR will not involve in the production departments. In the finance also will not involve. So for those
Okay.
costs and all comes under in indirect.
But I could not accept the definition. Anybody to support him or to add something else to this statement called direct cost?
Sir,
Okay,
my side,
before I
the
come to
business
direct
which is
cost.
coming from
Yeah,
directly
yes.
from production to buyer, it's a direct cost, and where indirect, where the brokers or intermediate like distributor are involved in this scenario, where they call it as a indirect cost.
Sir, indirect costs are those which are not directly related to like the manufacturing costs. Like say if we are paying any rent,
Which one?
for if you are paying rent for the facilities or electricity charges, all of this becomes the indirect cost for production. Like say if a material is facing some kind of depreciation, that is also indirect cost, but direct cost will be those which is for directly being when producing the product, at that time whatever is incurred to the company.
Okay, direct cost is a cost which is directly involved in the production process. the
Production
production.
process.
Yeah,
Yes.
So my way of defining direct cost. Without that, you can't produce that product at all. If anything of that nature, that cost is called as direct cost. Three things are there in direct cost. One is direct material, direct labor, and direct expenses. To make a pen, if you need a refill, if you need a cover, if you need a cap, these are all the direct material cost, direct material. To assemble this, if you appoint some labor, the money what is spent on that labor is called direct labor. Direct material, direct labor. And any expenses to support this activity is called direct expenses. Okay. So three things are there: direct material, direct labor, direct expenses. These three put together we call it as direct cost. Then any other indirect, what is indirect cost? Indirect cost means any cost which cannot be directly proportionated to the unit of production. To produce one notebook, I need 360 page. The cost of buying 360 pages is called as material cost. That is direct cost. Okay. I need a room to manufacture my notebook. But how many notebooks I am able to manufacture in that room? That depends upon the production capacity, the machine capacity, order what you are taking, and the speed at which you are manufacturing. So the rent paid on the room, rent paid for the room to manufacture my notebook is not a direct cost, it is indirect cost. To make one notebook, 360 page is required. 360 page. What is the cost of 360 page? So that I can directly proportionate the cost of material to the unit of production. To make one notebook, 360 page. 360 page is available in the market for rupees 3 rupees 60 paisa. The 3 rupees 60 paisa is the direct cost. You got my point? That is direct cost. Indirect cost is nothing but a cost which is not able to be, which cannot be directly apportioned to the or directly proportionate to the production. Example, rent paid for the factory. Suppose the total rent paid for the factory in the year is 1,20,000. Total number of units produced in the year is 1,20,000, assume. So we cannot simply say that to make one notebook or to make one unit of output, I have spent 1 rupee worth of rent for the factory. I can't say that. In 1 month, there may be 10,000 units produced. In another month, 20,000 units produced. In another month, no units are produced. So if that is the case, that cost is called as indirect cost. But we are not talking about that indirect cost or direct cost here. I asked you to make a pen. What are the different costs involved in that? One is material cost. Another one is labor cost. Another one is expense cost. The fourth one is overheads. All indirect expenses are called as overheads. All indirect expenses are called as overheads. The expense which cannot be directly connected to the unit of production, the output, the volume of output. That cost is called as indirect cost or overheads. We call it in cost accounting overheads, over and above the heads. That means we have 3 heads of cost: direct material cost, direct labor cost, direct expense cost. If you have anything else apart from these 3, all those things are called as overheads. Please understand. But the place or the purpose for which the indirect cost is incurred will classify the overheads into different categories. I repeat again, the purpose or the place in which or for which the indirect cost is expended, the indirect cost is spent, will determine the name of the overheads. Suppose any indirect cost, it can be indirect material or indirect labor or indirect expenses that are related to production process, manufacturing process, or the factory or the plant will be called as factory overheads. Or any indirect cost that is incurred in administration process will be called as office overheads or admin overheads. Office overheads or admin overheads. Third one is any expenses which are indirect nature spent in the promotion and selling of or distribution of material, I mean distribution of finished goods by the company to the place of customer will be termed as sales and distribution overheads. Selling and distribution overheads. Am I clear? Is it understandable to you? Direct cost, indirect cost. In direct cost, we have three: direct material cost, direct labor cost, direct expense cost. In the indirect, we have three. That is production overheads or manufacturing overheads, or simply you can call them as factory overheads. Factory overheads, manufacturing overheads, production overheads. Three are one and the same. Any indirect expenses that are connected to production process is called as factory overheads or manufacturing overheads or indirect, I mean, manufacturing, production or factory overheads. Example, anybody can tell me the example of factory overheads? Example, can you guess some example of factory overheads?
So the machine buying,
Sorry?
the machines, we are buying for the machines for the production.
Buying of machine is a cost or not?
Yeah, that is the production cost, no, that you have to buy.
Buying of machine is not cost in this category. Suppose you are buying a machine for 1 lakh rupees.
Depreciation of the machines,
Depreciation of the machine is the cost.
cost incurred.
Though you are buying the machine for 1 lakh or 2 lakh or 5 lakhs, all the 5 lakhs, you cannot just take it as a cost. If you do so, that is wrong. Because that machine is going to be used by you for the next 10 years. You are buying the machine for 1 lakh. You are planning to use that machine for 10 years. Then what is the cost of the machine for 1 year? Buying the machine for 1 lakh, planning to use the machine for 10 years. What is the cost of the machine for 1 year?
You will divide 1 lakh by 10, sir.
How much? Yeah? How much, madam?
So 10%, the asset,
How much I'm asking, you're telling 10% or something.
1 lakh.
Amount you tell.
1 lakh, sir. 1 lakh.
1
lakh,
lakh.
sir.
1 lakh.
Yes,
What is the
sir.
cost of the machine?
10 lakh.
Huh?
So 10 lakh, but 1 lakh for the 1 year expense.
Okay. If it is 1 lakh, cost of the machine is 1 lakh.
So 10,000.
10,000, sir.
10,000 rupees is the cost of the machine to be charged as cost to the production. Okay. But that is not indirect. That is depreciation. Depreciation on plant and machinery can be indirect expenses, comes under factory overheads. Okay. Any other expenses which are the example for factory overheads?
Rent for the building.
Rent for the
Buildings.
buildings.
Your factory.
Which
We
building?
can call it as a factory. Sorry. Not
Sorry?
buildings. Factory rent.
Factory rent. Yes, excellent. Good. Next,
Also,
Annual
property
maintenance.
tax,
property tax of what?
suppose if it is not a rent, it is a own property. The factory,
Accepted, but which building? Which property?
the land, the building.
Hmm?
Property
Again,
tax on
building.
production facilities.
So
Property tax
infrastructure
on property.
charges. So infrastructure charges.
Wait, sir, we'll finish this and go. What about the property tax? Which property you mean to say? Property, there are so many property will be there in the company, right?
Which is related to production, sir.
Production unit.
What is the name for that?
Machinery,
The factory,
Machinery you will be paying property tax.
Factory.
Oh,
the
good on.
factory, sir, or factory or sales unit or whatever.
Which one? Not getting you.
Factory, or maybe, yes.
Sorry,
Property tax will be paid on land and building.
but land and building, you may have so many land and
Maintenance
buildings.
charge.
All the amount you
Maintenance.
pay on the land and building cannot be treated as the property
Of the
tax
manufacturing
of
unit, actually.
factory nature, right?
Of the factory, actually.
Production unit.
Hmm? Tax, property
Property
tax paid
the
on
production unit.
factory premises, right?
Yes,
Yeah.
sir.
We cannot simply say that property tax. Property tax can be paid on office building. Property tax can be paid on warehouse building. Property tax can also be paid on store. Property tax can also be paid on the factory premises. But factory premises property tax paid is
Overheads.
overheads.
Factory overheads.
Factory overheads. Yeah. Any other example?
Annual maintenance charges,
Again, annual maintenance. For what?
machineries,
Okay, accepted. Any other example for
The selling cost,
what is selling cost? What we are discussing?
we are to GST or to
So what we are discussing? What we are discussing actually?
purpose, sorry, sir, for purchase
One
of
second. One second. What we are discussing?
Cost
cost.
of
Which one?
retail pleasure. What are the
Sorry?
components of what are the component of the cost in
That is okay. There's a broader category. Now,
Indirect
right
cost.
now, what we are discussing?
Indirect
Factory
overhead
manufacturing
Example
and
for
overhead.
Factory overhead expenses.
factory overheads. I already told you what is factory overheads. Then how can you bring something on sales to back factory?
Sorry, purchase actually, not sales.
Sorry?
Purchase of materials, that
Purchase of,
materials.
is it a, what is overheads actually?
Sir, indirect
Purchase
expenses.
of material. Somebody is telling, please respond. What do you understand by overheads from the last 2, 3 or 5? What is overheads?
Sir, overheads is the more the price of
The
the
indirect
product
expenses.
more than the
Indirect, simple meaning is indirect expenses, right? Simple meaning is
Yeah.
indirect expense. Overheads are nothing but indirect expenses. That's it, simple. Then how purchase of material can be overheads? What is purchase of material? What material are buying?
Purchase of material is a direct expenses, which is related to
Direct
production.
Direct expenses.
purchase of material is an example for
Direct expenses.
Buying refill for production of pen.
that's okay. But what headings we are having? We are having only 3 headings: direct material, direct labor, direct expenses. Apart from these, everything is overheads.
Overhead, yeah.
In overheads, we have 3 categories: office overheads, factory overheads, selling overheads. Okay, then what is the what category you will be including the purchase of material?
Okay, sir, administration, that is the salary also come, indirect cost salary.
1 minute, sir. We'll go one by one. We are having a matter here that purchase of material. Under what category you will be including this?
Sir, if the purchase has been done for the factory BA, we will put it in the overhead cost of the factory.
Okay,
So the
then
direct expense in the first one, what you told, sir.
And if some purchases have been made for offices purpose, it will not be. It will not be.
but purchase of material is very much evident, right? What do you mean by purchase of material?
It's a direct materials cost.
Direct material, that's it. Unless otherwise there is no explanation given. Or we have to see what material it is purchased. What material? Normally, I assume that's a direct material. Without material, I can't produce anything. So, purchase of material is the example for direct material. Suppose if it is indirect material, then I have to see for which purpose that material was purchased. Whether it is used in office or used in factory or used in selling process. Then based on that, it will differ. All right. Any other example for factory overheads?
Production supervisor
Power
salaries.
expenses.
Yeah, production supervisor salary. Good.
Electricity bill.
Electricity bill. Okay.
Factory utilities. We can say the factory utilities.
Factory
utilities.
Okay, factory utilities. Okay, then
factory insurance.
Factory insurance. Okay, all right. So you got the point. Any expenses or any material or any labor which are indirect in nature that are connected to manufacturing process or that are connected to the plant, machinery, or any kind of production process will be termed as factory overheads. Okay. Let us come to this one by one later. Look at this PDF file. I have defined the cost here. Cost is nothing but the any expenditure that is spent on buying anything or any service. Okay. Cost refers to something that must be sacrificed by one person or one company to obtain a particular thing. Cost is nothing but something that has been spent or that has been sacrificed to obtain certain thing is called cost. Okay. So what is costing? Costing refers to the techniques and the process of estimating the cost of a product or a service. Please listen. Costing is nothing but the process or the technique of what? Of ascertaining the cost. Ascertaining. What is ascertaining? Estimating the cost. Before you produce or before you bring your product to sell in the market, we will have to ascertain the cost. We will have to estimate the cost. For estimating, for ascertaining, we have some techniques. We have some tools, some process. All those process put together, we call it as costing. Okay, costing. So what is cost accounting? There is another concept called cost accounting. It is the process of classifying, recording, allocating the various costs incurred in the process of a production by a company. Okay. So what is the basic objective of cost accounting? Objective. I already told you. The basic objective of cost accounting is to ascertain the cost. Ascertain the cost. Point number 2, determine the selling price. Determine the selling price. Then point number 3, to have a control over the cost. To have a control over the cost. These 3 are the basic objective of cost accounting. How do I ascertain the cost? We have some techniques. We'll see one by one, but not all the techniques. For our syllabus, we have 1 or 2. We'll discuss that. How do I ascertain? Okay. If I ascertain the cost of a product, I can just add some percentage of profit. Then we can determine the selling price. Okay. Third objective is control over the cost. I can't just spend money. I'm not telling you not to spend money, but not spending money unnecessarily. I can get the material for 5 rupees, the same quality material. I should get for 5 rupees. If I get it for 6 rupees, then there is no control over the material cost. Okay, so control over the cost of production. Then preparation of financial statement. In cost accounting also we can prepare the statement of profit or loss. Okay. Then the next one is formulation of operating policy based on the learning, based on the techniques what we follow. We come to know some kind of learnings. So based on that, we can formulate some operating policy for the company, the production policy, operating policy. Okay. So these are the various advantages of cost accounting, but basically 2 objectives. One is ascertainment of cost, another one is control over the cost. These 2 are the major objective of cost accounting. Okay. Okay, having understood the meaning of cost accounting, will come now the element of cost. Look at this chart, the element of cost. I already asked you a question. You are buying a pen for 10 rupees. What are the major costs involved in it? Very basic cost is material cost, without which we can't produce that particular product. Material cost. Then point number 2, labor cost. Point number 2, labor cost. Point number 3, expense cost. Expense. Material, labor, and expense. Basically 3. All these 3 can be subdivided into 2. Each. One is direct material, indirect material. Another one is direct labor, indirect labor. Another one is direct expense, indirect expense. All the indirect, you can bring it as overheads. Look at this chart. Is the chart visible to you? A small chart I'm displaying for you. Is it visible to you?
Yes,
Yes, Professor.
So all these indirect material, indirect labor, and indirect expense are put together. We call them as
Overhead
overheads.
expenses.
Okay. So based on the purpose or the place where that particular indirect expense are taking place, we can classify them into three categories. One is production overheads, or you can call them as work overheads, or manufacturing overheads, or factory overheads. Second one is administration overheads. Administration overheads. Third one is selling and distribution overheads. So these three are the overheads. Okay. So direct material is nothing but the material out of which the product is produced. Okay. For example, cloth is a direct material in dress making. Okay. Direct labor, any labor expenses, any labor cost involved in production of a particular product. Example, labor engaged on the actual production of a product is called labor cost. Okay, then direct expenses. It includes all expenses other than the direct material and direct labor, which are specifically incurred for a particular product or a process. Simple example, simple meaning. Direct means anything which can be directly directly involved in the production process. Without that, or we can just calculate how much we spent on the production of one unit. If you are able to do that, that is called direct. If you are not able to do that process of calculating the cost of a product, then we can call them as indirect material, indirect expenses or indirect cost. Direct cost is nothing but a cost which can be directly proportionate to the production process, the output. Indirect means which cannot be apportioned directly to the output. Okay, that's called indirect. Okay. Now we are coming to a very, very important aspect. How do we estimate the cost? We have to prepare a cost sheet through which we can estimate the cost. Cost sheet. Cost sheet for a product. Direct material. If you want to start a production process, last year some materials might have been left out. That is opening stock of this year. So opening stock of material plus purchase of raw material plus any expenses you spend to bring your materials from one place to another to your premises. That is called carriage inward, transport cost on material. Some company will supply the material to your doorstep. Some company will be asking you to take it and go. Okay. So carriage inwards minus closing stock of raw material. Closing stock of raw material. Then cost of direct material plus direct expenses. Okay. Plus direct labor, direct expenses, direct material. All these three things put together, the total is called as prime cost. Out of 10 rupee, what you pay for buying a pen, the maximum percentage will be called as prime cost. Will be 5 rupees or 6 rupees. Will be prime cost. Are you understanding what is prime cost? Prime cost is nothing but the sum total of all direct material, labor, and expenses. The statement is clear to you up to this?
Yeah, Professor, in this not mention the direct. Okay, I got it. The direct labor and wages. Fine.
Yeah.
Okay.
Okay. Then after finding out the prime cost,
But here is outstanding and prepaid expenses. Can you please explain
That we
more?
forget it. If there is anything, we have to bring, otherwise no, we forget it. Suppose we paid wages 2 lakh rupee,
Yeah.
which includes 50,000 for the next year. Then you would take only 1,50,000 here.
Oh, fine. It's related to the labor wages and
Yeah.
okay. Got it. Thank you.
Yeah, only the current period, wage and any other charges to be taken into consideration.
Okay, I got it. Thank you.
Yeah. So after finding out the prime cost, we have to add the factory expenses. We have to add the factory expenses. Any factory overheads that need to be added here one by one. Then, if you add the factory overheads, you will get the total. After getting the total, we have to add the opening stock of work in progress. What is work in progress? Any material that has been taken from the store and not yet finished. The process is on, but it has not converted into finished goods. While closing the last year, we might have some work in progress, opening stock that need to be added, and this year closing work in progress need to be minus. Okay. If you do so, the result is called factory overheads or factory cost. Okay. Look at this. We have 3 columns. One is total cost. Okay. Another one is number of units, and then cost per unit. Cost per unit is nothing but total cost divided by number of units. Suppose your factory cost is 1 lakh. Number of units produced is 10,000. So 1 lakh divided by 10,000 is equal to 10 rupee. That's called cost per unit. Cost per unit. Okay. So next, after finding out the factory cost, we have to add all the administrative overheads. Administrative overheads or office overheads. One by one. Example for office overheads, any indirect cost or expense or labor or material spent on office or spent in the administration process. All right. Example is there in the slide. Office salary, office rent, office insurance, anything which is related to office. But the nature of such expense will be of indirect. If we add this, we will get the amount that is called cost of production. Please understand, factory cost plus all total of administrative expenses called as cost of production. Okay. Along with cost of production, we have to add opening stock of finished goods, and we have to minus the closing stock of finished goods. Closing stock of finished goods. If you do so, we'll be getting the cost of goods sold. How much the cost incurred to make these goods ready for selling. Cost of goods sold. After finding out the cost of goods sold, we have to add all the indirect expenses, indirect material, indirect cost or indirect labor incurred in the selling and distribution process under the heading called selling and distribution overheads. Example for selling and distribution overheads: advertisement, salesman commission, sales office rent, etc. Anything related to sales and distribution. If you add the total of selling overheads with the cost of goods sold, we will get cost of sales. Suppose cost of sales is 2 lakh. We fix according to the managerial policy the profit percentage. I want 10% profit on the cost. So 2 lakh plus 10% of 2 lakh is 20,000. So 2 lakh 20,000 is the selling price. Cost of sales plus profit is equal to sales. Is equal to sales. Any doubt in this statement? The format, the specimen statement. Yes. Have you understood this statement?
Professor, in administrative, I think that's one, the administration expenses. So we can add staff pickup and drop the travel expenses, right?
Staff?
Travel expenses. If we have
For
facilities to provide.
Who is the staff and what for what purpose is traveling?
No, just we are pickup employees and dropping, like it's a transport facilities.
For whom?
Employees.
What he is doing, that employee, where he is? What is the nature of the job of that employee?
It may be anything related to the companies, right?
No, you will have some profile, right? That employee will have some profile.
So if he's
What he is
part of
doing?
administration, then it can be added over
That
here.
is the point. That is the point. Yes. Go ahead, madam.
Part of
Please.
factory, then it'll have to go to the
Yes.
the other one, manufacturing and production
Yeah.
part.
I have one doubt, Professor. See, in maybe
One minute. Is that clear, gentlemen? Somebody was asking about traveling expense, right?
Yeah, me only, Professor.
Okay. Is that clear? That girl is telling some explanation. Are you
Yeah,
understanding that?
that I understand. See, one thing. See, 10 employees in the same route. So in the out of 10 employees, 2 employees working in factory, that productions department, and 2-3 employees working in finance.
Good question.
And like,
Good question. Anybody is having answer for this?
Yes,
What is the
actually,
point of discussion? 1 second. What is the point of discussion? A facility is shared by different department. That's the point.
Yes.
so overall transport is divided by number of employees that is used, and we allocate the cost according to the employees, team they work in.
Yeah. Very good. That exercise or that process is called as allocation of
Allocations. Yes.
allocation of overheads, which we are not going to study in this MBA, but in cost accounting in detail, if you go, it will be coming. But the process is called as allocation of overheads, meaning a same facility is shared by 2-3 departments. Now you're telling admin staff also coming in, selling staff also coming in, or something like that. But in general, this is a very simple example. But in general, there are some real examples also here. Suppose there is a room, there is a canteen facility, or there is a recreation club, and there are so many other common facilities. Electricity, for that matter, if you have sub-meters installed, okay, no problem. Otherwise, it's a problem. How many units are spent, how many units are consumed in a particular department. So all these processes are coming in. So that is called allocation of overheads, absorption and allocation of overheads. We have to see how much money spent actually on that particular facility, and who are all using that facility, and to the what tune, what quantum, up to what extent each and every department has used it. So based on that, we have to allocate such overheads to the different departments accordingly. We have a separate concept, we have a separate process called allocation of overheads, absorption and allocation of overheads. And again, we have 2 methods. One is old methods, traditional methods. Nowadays, modern methods, ABC costing, and so many other modern techniques have come, which is not a subject matter of this particular course. But again, you understand what's the logic of it. Good question. Thank you. Anybody else?
So if we take any service related, will it help actually? Because
Same
producing.
logic. Same logic. Service
Because
related or whatever it is, same logic. We have to apply, and you have to find out how much money to be charged to that particular department under admin or under service, production or under selling.
for example, Flipkart or Amazon, they don't produce any products, but they only provide platform.
Louder.
Flipkart and Amazon, they don't produce any product, they provide platform. So they will
Flipkart
also
and
have
Amazon?
cost per unit sold. So how that will account?
I'm so sorry, you are not audible for me. Flipkart and Amazon, I'm able to hear, but after that, I could not hear you.
Yeah, they have something called as cost per unit sold, but they don't produce any cost. I mean, they don't produce any units actually. I mean,
Okay,
so how that is can be evaluated?
why you are going to evaluate? What is your question? I could not get your question. Why are you going to evaluate?
The cost per unit sold, something
Yeah,
they will
cost
also
per
use.
unit sold. They are not telling cost per unit produced. They buy one unit. I don't know. They don't buy one also. So the seller is some third party. The buyer is another third party. They're just mediating. Okay, cost per unit sold. Suppose you are ordering one mobile phone through Flipkart. Okay, so the agent may be, I mean, the seller may be in Delhi or in Chennai or Mumbai, wherever the place it may be. Okay, you are ordering a product, and the Flipkart is delivering that product to you, to your address. So from the place of picking and the place of providing the object or the article to the customer, during that process, they are spending some money. That money they are calculating as cost per unit sold. Sold means not you are selling. You are not selling. Who is selling? Some product is coming from their own, and many products are coming from the particular seller only. You can see in the Flipkart or in the Amazon or any other platform like this, online platforms. The provider of the service, I mean, the provider of the product will also be mentioned there. I don't know whether you noticed or not. If you buy any product from these particular companies, online selling companies, you can see if you're buying a chair, down that picture there will be a mentioning from which dealer or from which seller that product is coming to you. So the cost involved in mediating this, I mean, not just exactly mediating, just transporting. They're just bringing that from the place of delivery, from the place of sales to the place of purchase. That's it. For that, how much cost involved? That they may be calculating it. What is the doubt on that?
Not just that, not just the transport or delivering it to customer. There are so many other costs also.
Yeah, background work, many
Yeah.
things. I'm just telling an example. I'm
So
not telling
how-
the physical transport of the product. I'm not exactly meaning the physical transport of the product. I include everything, the background, all the process. But how does that relate to you in this process? I'm asking you. What's the exact doubt?
how that can be differentiated between direct and indirect cost is something wanted to understand here.
No, that is indirect. See, whatever the manufacturing process we're talking about, that is selling. They are not a manufacturer. They are a trading business owner, trader. Not even just exactly trader. They're just transporting it. If I am understanding the business model of the Flipkart and Amazon properly, they are not even trading. They're just facilitating the process of movement of goods from one place to another place through their platform. But that is not connected to the cost sheet.
So the question is, the direct cost and indirect cost definition may change from organization to organization based on the services they provide.
I got your point. Direct cost and indirect cost will apply only to manufacturing unit and service provider. If suppose you are having a hospital, suppose you are having a hotel, okay, or a staying facility, this kind of industry, this kind of sector will be more involving in this cost sheet. Okay, any business of Flipkart and Amazon, that's why the modern business units will have their own changes or their own adjustment to this cost sheet. They cannot have a cost sheet like this.
Yeah, that
the
answers
definition
my
will
question.
not change.
Yeah.
Definition will
Definition
not
will
change.
change.
Remains constant. Direct cost, the cost which is incurred by a company to manufacture something which can be directly apportioned, which can be directly connected to the unit of production. If I spend 5 rupee on material, I can say to produce this output, the material cost is 5 rupee. Clear cut, if I am able to say that cost is called as direct cost. If I am not able to say, then that cost is called indirect cost. Flipkart and Amazon, all these things are not producing anything, so direct cost will not be there at all. Everything is only indirect cost, and again, they are not producing anything. Their cost sheet will not be like this. They can't even have a cost sheet of this. This is only for manufacturing companies. Are you getting my point?
They will also have a cost sheet, but
Yeah, not like this. Yeah, tell me. Yes,
but
go
not
ahead.
like this. Yeah.
Yeah.
Okay.
But cost sheet is only for manufacturing business. That too, unit is easily evaluated. Look at this. Look at this cost sheet. The last column is cost per unit. We have lot of techniques to estimate the cost. One of them is cost sheet, where you have a unit of production. If you have unit, suppose meter or liter, that's what unit of measurement, right? Measurement unit in terms of oil, we can have liter. If you have any other product, suppose notebook, number is the unit of measurement. Cost unit is number. Bricks, number. Okay. Any other, suppose cloth, textile industry, unit of measurement is meter. Textile industry, unit of measurement is meter. Those industries which is producing a lot of material, but all units are identical in nature, identical. Those companies, those industries can only apply this method of estimation of cost. If your company is in the process of making some output through different stages, there also you can have a uniform output, but it is not coming out of one process. It's coming out of 3-4 processes. That time you cannot have a cost sheet like this. You have to go for the process cost, process costing. So we have a lot of techniques to arrive at the cost of a product based on the industry, based on the nature of the industry. The method what you apply to estimate the cost of a product will change. This is a common example for a product which is having a unit of production in a bulk. No process is involved, only one stage of production. That's all. It goes to the production department, immediately it gets converted into output or finished goods, and it comes to warehouse. The warehouse people are marketing it, and it is going for sales. That's all. If that is the kind of industry, then this kind of cost sheet can be used to estimate the cost of a product. Yeah, anything you want to add? Yes, gentlemen.
No, I'm good.
Sir, if we have, suppose I have a mobile manufacturing unit, and my mobile.
Little louder.
Hello.
Unclear.
Hello.
Yeah.
If I have a manufacturing unit of mobile, I suppose manufacture mobile, and Flipkart and Amazon is selling my mobile. So the commission whatever going for Flipkart and Amazon will come under the selling expenses, I think. Is it right?
Anybody can just tell me what he's speaking about. I could not get his voice clearly. You are manufacturing two mobile.
The selling expenses will be for the mobile producing company, but for Amazon and Flipkart, it will be different. They will have to look at their cost of getting the mobile from your factory to their platform and then deliver it to customer. That comes as a cost for them.
You got the point?
Yes, sir. Yes. Okay.
So please don't bring any specific business model. See, Amazon and Flipkart, their business model is unique and specific. This cost sheet is only for those people, those industry which are manufacturing some product. That's why you are not able to connect. They will have a different, I think the business model itself is different. They are neither producing nor selling. That's what I understand about the business of Amazon and Flipkart kind of online platform.
Yes, sir. You answered my question actually. So my question was, when any organization is not producing any physical goods and they are more involved in selling, then the definition of direct and indirect cost may change or may not change. It's a question you answered.
It won't change. The definition of direct and indirect expenses will not change depending upon the business unit or depending upon the business model. It remains constant. Any expenses which can be directly associated with the cost of output that expense is called as direct expense. That's it. You can't change that. We can't change that. See, to manufacture a notebook, paper cost is a direct cost. Okay, the stapler pin or the any other tab what you're using to tie all the papers, that could be indirect cost. Without a stapler pin, I can make a notebook, but without a paper, I can't make a paper notebook. You may have some other technology to make a notebook, but general, I am producing a paper notebook. Okay, paper notebook. Out of paper, out of page, I am making a notebook. Paper cost is a direct cost. Okay, the stapler pin, what I'm using to connect, I mean to tie all the pages together, or any other material what I'm using to connect or all the papers together, tie all the papers together. That cost is indirect cost, indirect material. In a notebook, the wrapper is indirect cost, but the page is a direct cost. Without wrapper, you can make a notebook. You can apply any other paper or even just a paper, you can make a notebook as a wrapper. Okay, so wrapper cost is indirect, stapler cost is indirect, or the paste or any other tab or any other kind of binding material what you're using, that is indirect cost. Without that also you can make a notebook, but without paper you can't make a notebook out of papers. Okay, or any printing design or the college name. Suppose the NSR college wants some 1,000 notebooks. They want to supply to all the students. We want the name of the college to be printed on the first page. That is indirect cost. Without that also I can make a notebook. Okay, so direct and indirect are always standard, common. It will not change depending upon the industry, depending upon the business model. If you produce something, then only the direct and indirect concept comes into picture. If you don't produce, sir, I'm just buying and selling. There is nothing called direct and indirect. You are buying and selling, that's all. You are buying from somebody for 10 rupee and you are selling for 11 rupee, that's all. All cost what you are incurring is indirect only. You won't spend anything on direct. Okay, so we don't spend much on the definition of direct and indirect, but understand any cost which is directly associated with the volume of output, that's called direct cost. Anything which I can't say how much is the amount spent on that particular cost to make 1 unit of output, that cost is called as indirect cost. Indirect cost demands the strategy or some kind of mechanism to allocate the cost to the unit of output, but direct cost does not demand any such kind of mechanism, because one notebook 360 pages, what is the cost of 360 pages? That's it enough. I don't want to have any mechanism to derive how much is the material cost for one notebook. I don't want. If that is the case, that cost is called as direct cost. If that is not the case, that cost is called as indirect cost. Okay. Can you move on to the next one?
Yes, Prof.
Somebody is on video. Can you please mute your video? Okay, thank you. So can you, are you okay with this statement? This statement is very important. You have to understand this statement. I repeat again without any much explanation inside. Prime cost includes 3 things: direct material, direct labor, direct expenses. If you add these 3 things, you will get prime cost. After finding out prime cost, you have to add the factory overheads. You will get the factory cost. Okay. After finding out the factory cost, we will add all the expenses, indirect nature happening in office and admin. Then we'll get cost of production. With cost of production, we have to adjust for last year opening stock of finished goods and the current year closing stock of finished goods. The left out amount is, or the result is, cost of goods sold. So out of that, you have, in addition to that, you have to add the indirect expenses that take place in the selling process, distribution process, marketing. If you do so, you will get cost of sales. So if the management decides some percentage on cost, we'll add that percentage on cost as profit. The result is going to be sales. All these can be divided by the number of units that will be giving you the per unit cost. If you take this 1 lakh, if it is 1 lakh, number of units is 10,000, then this will become 10. 1 lakh unit sold for, sorry, 1 lakh is the rupee of sales by selling 10,000 units. So 1 unit can be sold for 10 rupees. That's it. Is that statement clear? Okay, look at this. Classification of cost. There are so many bases according to which I can classify the cost. There are so many bases based on the nature. We just classified in the beginning: material cost, labor cost, overhead cost. Based on the function, we can classify them: production cost, admin cost, selling cost, and distribution cost. Based on the variability, suppose in the beginning somebody told variable cost and fixed cost. I told them to hold on for some time. Now we are on that. Based on the variability, we can classify the cost into 3: fixed cost, variable cost, and semi-variable cost. What is fixed cost? Anybody can tell me what is fixed cost? Any guesses? Somebody told the beginning, right? Fixed cost.
Fixed cost is something that will not change
That
based
will
on the
not
output.
change. Okay.
So fixed cost is based on maybe we can take it in rental as an example. So we have an agreement.
First,
We will
you tell
pay.
the meaning. Rent is an example. Okay, understood.
Yeah. See, 1 year we are paying like 10,000 as a rent. So that we can say is a fixed cost.
But next year it is going to be 11,000 if 10% increase. Then
Yeah, but the current year that is only 10,000, right? So we are calculating. So that we can say as a fixed
okay,
cost.
suppose my rent is increasing every month 5%. That time.
Sir, if I don't think so, the rent will
No,
increase in
you
month on
can't say
month.
no. I am the house owner. My tenant is there. We have an agreement.
Nobody
You can't say in
will
general, you can't increase the rent by every month.
every month.
Suppose
Nobody will.
One second. My house is worth for 10,000 rupees, but I'm
Yes.
giving it for 8,000 by a condition that every month 10% increase. My tenant accepted. We are having
Nobody will
agreement.
accept.
It's going on.
Nobody will agree like that, sir. It's a
Sorry?
business purpose. Nobody will agree to a
Arey,
rent.
who are you to say nobody will agree, man? I have my own tenant. He has agreed.
I don't think
You
so,
as an
sir.
accountant, or analyst, only tell the
Accountant.
logic. You can't tell me, we can't prescribe anything to the society. We are not legally something. Okay. Suppose, I'm asking suppose. If that is the case, don't you agree rent is a fixed expense? My
Yeah.
point is, I'm trying to explain
It will be
the
a fixed
nature of
cost.
fixed cost.
It'll still be fixed cost only.
Yeah,
sir.
still it is fixed cost or variable cost. You tell me.
Still, it is a fixed cost because we have to incur it every
So
month.
my point is, if you accept, still it is fixed cost. My point is justification is not that much acceptable. That's what I'm trying to say, right? Fixed cost. Then what is fixed cost?
So the amount of output we are producing, it'll like no matter what is the output we are producing,
No matter how much you produce, no matter how many units you produce, no matter how the activities are happening in that particular room, but we pay the rent 8,000 rupees first month, second month we pay 8,800, third month we are going to pay some X amount or Y amount. Or take an example of his own, every month 10,000 rupees, whatever it is. No matter how many units are produced in that particular room, I have to pay only the fixed amount of money to my landlord. Fixed is not just 8,000 or not just 10,000. It can be 8 or increasing 10% every month or every year. That is not the definition. That is not a characteristic. Then what is the nature of fixed? The rent remain constant irrespective of the units what you produce. I say like this: fixed cost, the cost which remains unchanged, which remains fixed, which remains constant, irrespective of the volume of production. That's the important key word there, irrespective of the volume of production. If volume of production increases, if the cost also increases, then that cost is called as variable cost. Simple example, I'll tell you. To produce one notebook, I buy material, paper. I buy paper by spending 5 rupees. Listen very carefully. 5 rupee I am spending to buy paper to make one notebook. Then how much amount I have to spend if I make 4 notebook in terms of paper? Am I clear? I am spending 5 rupee to buy paper to make one notebook. If I want to make 4 notebooks or 5 notebooks, take an example, 5 notebooks, how much I have to spend?
20 or 25.
Sorry?
20 or 25 rupees.
25. 20 for 4 notebooks, 25 for 5 notebooks.
Fine.
So, cost for paper cost, material cost, varies according to the volume of production. If I produce only one notebook, 5 rupee. If I produce 2 notebook, 10 rupee. If I produce 3, 15 rupees. If I produce 3,000 notebook, 1,50,000 or 15,000 rupees I have to spend. This cost is called as variable cost. Variable cost is one which varies according to the volume of production. Volume of production increases, total variable cost will also increase. But variable cost per unit remains constant. Suppose in the same example, I am producing 1 lakh unit of notebook, 1 lakh units. How much I have to spend in total for paper? 5 lakhs. Even if I produce 5 lakh units of notebook, what is the paper cost per notebook? 5 lakhs divided by 1 lakh, that is equal to 5 rupee. Variable cost per unit remains constant, but variable cost in total varies according to the volume of production. Volume of production increases, variable cost in total will also increase. Whereas fixed cost remains constant irrespective of the volume of production. Volume of production, irrespective of the volume of production.
So fixed cost, I can say the salary.
Salary.
Yeah.
Yeah, you can say salary is an example for fixed cost.
No, we take it as a variable cost because we hire based on the requirement and
No.
based on
If
the
you
contract
hire, then
level.
why? If you hire, then why do you say it's a salary? Salary means what?
Salary to labor.
Salary to
Labor.
no. In accounting, we don't say salary to labor. If we pay
Salary to
salary,
employees.
yeah, salary to employee. Whatever the remuneration you pay to employee, that can be called as salary. Whatever the remuneration you pay to the labor, that's called wages.
Yeah. So in that context, I may hire variably also, right? I mean, I will hire contract basis for 2 months, 3 months. That varies based on my output.
But that is not salary, right?
That is a fixed, right, Kiran? See, if we are doing first month, maybe we produce like 10 lakhs notebooks. So his cost, we are paying only 10,000 for his salary. So second month, we are producing like 22 lakhs or something notebooks. So at that time also we are paying on the same amount, right, for that employee. So in that case, that is a fixed cost, what I feel.
If you pay for piece rate, it's a variable cost.
Yes,
Piece
yes,
rate.
correct.
If you produce one notebook, I will give you 2 rupee. So wage to make one notebook is 2 rupee. That's all. How much time it takes, that is not a matter. Then it is called variable cost. Suppose you pay to the laborer per day, you are paying 1,000 rupees as wage. 1,000 rupees as wage. He will be coming by 8 o'clock. He will be leaving by 5 o'clock. During that period, how much he is going to produce, how many units he is going to produce, depends on 2 things. One is how many units you are giving supply, how many output, I mean, how much raw material you are giving. The second thing is how speed he can work. Okay, so if that is the case, that is called fixed cost. 800 rupees, the fixed cost. Then you have to divide that into number of units what he produced. But normally, to make a notebook, we will give it as piece rate system. Time rate system will not be applicable. Piece rate system. Wage methods are there. Piece rate and time rate. Okay. So if it is given piece rate, it's variable cost. If it is given on time rate, 8 o'clock to 5 o'clock, one shift, 1,000 rupees salary or 800 rupees salary. That is called fixed cost. Even one day there is a lockdown or there is a uh, insufficiency of raw material, or there is a power shutdown, or there is some problem in the factory, you have to pay the salary. You can't say that you will not give the salary. That is why it's called fixed. First day is producing 10 notebooks. Second day he may produce 11 notebooks. Third day he may produce 9 notebooks. All the days you are paying 1,000 rupees as salary. That is why it's called fixed. If it is not, based on the output he produced, if you calculate and give, that's called variable cost. You got the point?
Got it?
Yeah. So variable cost and fixed cost. So variable cost in total changes. Variable cost per unit remains constant. Fixed cost in total remains constant. Fixed cost per unit changes. Suppose I am paid hourly basis. Suppose assume I am paid hourly basis. Today 60 students are attending. Suppose I am getting 1,000 rupees per hour. Assume 1,000 rupees per hour. Okay. For simple calculation, it will take 600 rupees per hour. 60 students are attending. 600 rupees is my salary. Assume 600 rupees for 1 hour. Okay. Now I am paid 600 for 1 hour. Only 10 students are attending. That time also I am paid 600. 20 students are attending. That time also I am paid 600. 60 students are attending. That time also I am paid only 600. So 600 remains constant. That's called fixed cost. But now per unit fixed cost, per unit. In first case, only 6 students are attending. I am talking to the students. 6 students are attending. I am paid 600. What is the cost per student to the college? For conducting 1 hour class, what is the cost for the college for 1 student? In the first example, 6 students are attending and the teacher is paid 600 rupees per hour. Are you there?
100 rupees.
Sorry? 100 rupees?
Right.
Suppose 60 students are attending.
10 rupees.
10 rupees. Now look at this. 600 is fixed cost only. That is not going to be changed for the college. But 600 rupee is divided by number of students attending the class. That is going to be the fixed cost of salary for 1 student to conduct class for 1 hour. So fixed cost will vary per unit. In first case, 1 student is per unit is student. 1 student 100 rupee. In second case, 1 student 10 rupee. This is what people will call it as a scale of economy, scale of large scale economy, scale of economy. Larger the production, lesser the cost. Why? 60 students are attending, 1 student 10 rupee. Only 30 students are attending. That time 20 rupee per student is the cost. Okay, but at one point, after reaching a point of maximum capacity, fixed cost also will get double. Suppose it's a normal classroom, offline classroom, 100 students can sit in a class. So up to 100 students, the salary will be fixed. If 120 students are there, then class will be bifurcated into 2. So 2 classes will be there. Then salary will get doubled. So fixed cost will remain constant up to reaching the fullest capacity. One machine can produce only 1,000 units. The machine operator is getting 1,000 rupees salary per day. If the company wants to produce 1,200 units, he cannot produce. He has to go for second machine, or he has to go for the second shift at least beyond the working hours. Then another operator is required. He will also get the same amount of 1,000 rupees salary or more or less, depending upon the agreement. Okay. So fixed cost and variable cost. Any doubt in this fixed cost and variable cost? Now, the third category is semi-fixed or semi-variable cost. There are certain costs which remain constant up to certain extent. After that, it will start changing depending upon the volume of production. Electricity, you take an example. Up to certain units, the rate is different. After you reach certain point, the rate per unit is going to be different. Those days, telephone charges. I don't know about nowadays. Those days, telephone charges up to 200 calls. Okay, only 100 rupee. After 200 calls, every call will be charged for 1 rupee or 50 paisa like that. Okay, the semi-variable cost. Any doubt in this fixed cost, variable cost, and semi-variable cost? Like that, you can classify the cost into various categories depending on some basis. Controllable basis, controllable cost, uncontrollable cost. Like that, there are so many. We don't want to go into detail about the classification of cost. This cost is very important, so I explained it very in detail because this we are going to use it further. Can we move on, or do you have any doubt in the fixed variable cost? Yes, class. Yes, yes, yes. Thank you. So we can take some 5 minutes break. Okay, then we can move on to the next concept.
Yeah, Professor.
Yeah, I'll pause for 10 minutes. You can join by 3 o'clock. Yeah, good afternoon once again. Are you all there? Can you resume the session?
Yes, sir.
Yes, sir.
I'm sharing another file. Is it visible to you?
Yes,
Marginal cost. Yes, sir.
Okay, so the next topic what we are going to discuss under the costing is marginal costing. There are so many techniques, there are so many methods available in costing to determine the cost of a product or service and to have a control over the cost. One among them is marginal costing. What is marginal costing? Marginal costing is a costing technique in which the variable cost is charged to the unit of cost, but the fixed cost for the period is completely written off against the contribution. You may get confused, what is this contribution, what is this marginal cost and all. Marginal cost is another term used for variable cost. I'll show you a statement for you, then you can understand better. Look at this. Your sales minus variable cost for that sales. Variable cost for that sales is equal to contribution. Contribution. What is contribution? The excess of selling price over the variable cost. Suppose you are selling a product for 25 rupees. To make that product, you spent 15 rupees as variable cost. Then contribution is going to be how much? What's the amount of contribution? The selling price is 25 rupees. The total variable cost to make that product is 15 rupees. So what is the cost? What is the contribution per unit? Am I audible to you?
Yes, Professor.
Yeah, then how much will be the contribution? What is contribution? I told you. Contribution is a term used for referring the surplus amount after recovering the variable cost by the selling price of a product. Or you can say the excess of selling price over the variable cost is called contribution. If I sell a product for 25 rupees, the variable cost to make that product is 15 rupees, then what is the contribution? How much that product is contributing to recover my fixed cost?
10 rupees.
10
10
rupees.
rupees. 10 rupees is the fixed cost. So we classify the cost into variable and fixed, and we analyze the profitability of a particular situation by having this concept of variable and fixed cost. That technique is called as marginal costing. Marginal cost is a cost which is incurred in addition to the existing total cost if I produce one more unit of output in addition to the existing unit of output. I repeat again, Marginal cost is an additional cost incurred to produce one more additional unit from the existing level of production. Suppose the total cost to produce 10,000 units is 1 lakh. 10,000 units I'm producing, including variable cost and total cost, my total cost, including variable cost and fixed cost, my total cost is 1 lakh. If I produce 10,000 and one more unit, 10,001 unit, what is the change in the existing total cost from 1 lakh to 1 lakh 100 rupee or 1 lakh 50 rupee or 1 lakh 20 rupee? The difference between the existing total cost and the new total cost after I produce one more additional unit is called marginal cost. If I have not reached out the maximum capacity, the marginal cost will always be equal to variable cost. If I don't reach the fullest capacity, always my marginal cost will be equal to my variable cost. Fixed cost remains constant. If you produce 1 unit also, you have to spend that much cost as fixed cost. If you produce 200 units also, you have to spend that much amount as fixed cost. So to produce one more additional unit, what you are going to spend is only just variable cost. I'll tell an example. 20 students got admitted into MBA class. Okay, the rent payable for the room where the class is happening is suppose 2,000 rupees. 2,000 rupees is a rent paid by the institute for the room, for the classroom. 20 students are admitted. Now another one student is getting admitted. Is there any additional rent to be paid for that one student for the classroom?
No, sir.
Yes or no?
No.
No, sir. If the capacity of the room is not 20, if the capacity of the room is not 20, no rent is additionally paid for that one student. Then what kind of expenses are associated with that student? Suppose the college supplies the notebook and uniform, laptop, that cost is to be spent. That's per student you have to spend, right? College uniform, notebook, laptop, etc. So only that expense is going to be additional for the institute, not the room rent, not the salary of the staff, not any other fixed cost. So all other overheads remain constant, only the variable cost is increasing. Suppose the classroom strength is only 100, capacity is only 100. If 101 student is admitted, that time there is a problem of additional cost, not only variable cost, but also fixed cost. So by having this kind of process, we analyze the different situation, different level of operation. Suppose my company is working at 70% capacity of total installed capacity. What is the profitability? If it is working on 80% capacity, 90% capacity, or 50% capacity, what is going to be my profitability? Okay, or what is my break-even point? How much should I sell to reach out no profit, no loss stage? All those things can be done by applying this marginal costing technique. To come back to the meaning of marginal costing is a technique wherein the marginal cost, that is variable cost, is charged to the unit of cost, while the fixed cost for the period is completely written off against the contribution. We minus the fixed cost from the contribution, not from the sales. We have a breakup. Sales minus variable cost is equal to contribution. Contribution minus fixed cost is equal to profit. Okay. Then what is break-even point? When there will be a break-even point? If fixed cost is exactly equal to contribution. Okay, I'll come to that little later. So marginal cost, the change in the total cost when the quantity produced is incremented by 1 unit. Okay, say for example, variable cost per unit is 25, fixed cost is 1 lakh. Cost of 10,000 units will be 25,000 into 25 into 10,000 units. 1 unit is produced means they have to spend 25 rupees. If 10,000 units are produced, so 10,000 units into 25 rupees, that's equal to 2,50,000. This is a variable cost. Then what is the total cost? 2,50,000 plus fixed cost, that is 1 lakh. So total is 3,50,000. So 3,50,000 is the total variable cost. So total cost. Okay. If I produce one more unit from 10,000 to 10,001 unit, if I produce, how much will increase? Only 25 rupees will increase. Because this 10,000, I mean, 1 lakh fixed cost remains constant up to the maximum capacity, 100% capacity. So if you want to produce 10,001 unit, I have to spend 3,50,025. If I have produced only 10,000 units, I might have spent only 3,50,000. So the increase in the cost is 25 rupees. That increase is called as marginal cost. Any doubt in the understanding of marginal cost? Any doubt in the understanding of marginal cost?
No, sir. Looks good.
Okay. So the next is ascertainment of profit under marginal cost. As I already told you, contribution is equal to selling price minus marginal cost or variable cost. If we sell 1 unit for 25 rupees, to produce 1 unit, 15 rupees is the variable cost, then contribution is equal to 10 rupees. It is per unit. Contribution can be for total also. To produce 1 lakh unit, you are spending 15 lakh as variable cost. 1 lakh unit was sold for 25 lakhs. 25 lakhs. So what is the contribution in total? Sales is 25 lakhs. Variable cost is 15 lakhs. What is the amount of contribution? Sales is 25 lakhs. Variable cost is 15 lakhs.
10 lakhs.
10 lakh is the contribution, but 10 lakh is in total. So contribution can be for per unit and contribution can be for total also. Contribution per unit and contribution in total. Okay, look at this. Contribution is equal to selling price minus variable cost. Profit is equal to contribution minus fixed cost. Suppose fixed cost is 1 lakh, contribution is 80,000. What's the result? Fixed cost is 1 lakh, contribution is only 80,000.
Loss.
Loss. How much?
20,000.
20,000 is loss. So contribution minus fixed cost is profit. If contribution minus fixed cost is equal to minus or negative, then we can call it as loss to the company. When there will be a break-even point. What is break-even point? There is no loss and no gain.
No profit, no loss.
No profit, no loss. That stage, that level of operation is called as break-even point. When there will be a no loss and no gain, profit should be equal to profit or loss should be equal to
The total
Expense.
sorry,
expense.
0, right? Profit or loss should be equal to 0. If profit or loss is equal to expense, then there won't be any break-even point. There will be profit or loss. My question is, profit or loss is equal to dash at break-even point.
0.
0. When profit or loss will be equal to 0,
When total
contribution is
cost
just exactly equal to contribution should be exactly equal to what is profit? Actually, profit is equal to
total revenue minus total cost.
that is in this statement. Whenever did I use that concept so far? Under marginal costing, what is profit?
Contribution minus fixed expenses.
Fixed cost. That's it now. Contribution minus fixed cost. Of course, total expense minus from total revenue is equal to profit. That's true in finance sense. But here we have some logic. Okay, we are having a breakup of that expense. That expense is classified into two: variable expense and fixed expense. That is why we bring contribution into picture. So profit is equal to contribution minus fixed cost. At the break-even point, profit should be equal to 0. If profit need to be 0, what is contribution to be? Contribution to be exactly equal to
Sales.
Fixed cost.
Sorry,
Fixed expenses.
fixed cost, fixed expenses. Contribution should be exactly equal to fixed expenses. Then only we can say that level of sales. Suppose you are selling 1 lakh unit at the rate of 1 rupee per unit. So sales volume, sales rupee is equal to 1 lakh. If variable cost is equal to 60,000, your contribution is going to be 40,000. If fixed cost is also equal to 40,000, profit is equal to 0. If that is the case, break-even sales is equal to 1 lakh unit and 1 lakh rupees. Okay, break-even point can be expressed in terms of P, in terms of number of units also. Break-even sales in units, break-even sales in value, dollar or rupee or whatever it is. Okay, so look at this statement. Variable cost minus to from sales is equal to contribution. Contribution minus fixed cost, that is equal to profit. Okay. Let us take this as an example. There are 3 products: product A, product B, product C. Sales for product A is 1,50,000, product B 90,000, product C 60,000, and variable cost is given for 3 products, and fixed cost in total. To produce all these 3 products, the company is to spend 40,500 rupees as fixed cost. If you drop out product A or product B or product C, or even all the products are dropped out, you have to spend 40,500 rupees as fixed cost. That's the nature of fixed cost. Okay. Then the question is calculate PV ratio and total profit from the 3 products. Okay. A new concept has come here. PV ratio. What is PV ratio? PV ratio is nothing but the relationship between, or the ratio between, contribution and sales. Contribution and sales. How much is the percentage of contribution out of sales is called PV ratio. The formula to calculate PV ratio is contribution divided by sales. If you take total contribution, take total sales. If you take per unit contribution, you have to take per unit sales. In my example, 25 rupee is the selling price. 15 rupees is the variable cost. Contribution was 10 rupee. Now what is PV ratio? PV ratio is equal to 10 rupee, that is contribution per unit, divided by sales, that is 25 rupees per unit. 10 by 25 into 100 is equal to PV ratio. Profit volume ratio. PV ratio means profit volume ratio. How much contribution is there for sales of 100 rupees to contribute to my profit? That's it. Okay. So can we go with the calculation? Sales 1,50,000 unit for A, B 90,000, C 60,000. Total sales is 3 lakhs. Variable cost, it's given in the question, 1,20,000 for product A, 63,000 for product B, and 36 for product C. I have taken and written here again. Then contribution. Are you getting the contribution for product A? How much is the contribution for product A? 1,50,000 minus 1,20,000, that's equal to 30. Similar way for B and C. Are you getting the amount of contribution?
Yes, sir. It's directly mentioned. 30, 27,000 and 24,000.
Yeah. Yes. The total contribution is 81,000. 81,000 total contribution. Now, to operate this company for producing A, B, C products, the total fixed cost is 40,500. So I minus the 40,500 from the total contribution. I will get profit. The profit is 40,500. Now we are asked to calculate the PV ratio. What is PV ratio? I told you. PV ratio is equal to contribution by sales into 100. How much percentage of contribution of sales is there to get profit? It's called PV ratio. So first product contribution was 30,000 for a sale of 1,50,000. So 30,000 divided by 1,50,000 is equal to 20%. Check it, is it correct? 30,000 divided by 1,50,000. 1,50,000. That's equal to 20%. Similar way, 27,000 is the contribution for product B. That is divided by the sales of 90,000, equal to 30%. Then 24,000 contribution divided by product C, 60,000 sales. That's equal to 40%. Look at these three products. Which product is most preferred from the profit point of view?
C.
Contribution is more in the case of product A.
Product C
Contribution
is
is very
more
much
PV.
less in product B. Sorry, product C. But actually, if we take percentage wise, for a sale of 60,000, I am getting a contribution of 24,000. So it is contributing more to the profit. 40% of my sales is covering for my fixed cost, because only 36,000 is the variable cost for product C. So product C is most preferred in terms of profit volume ratio. It gives more percentage of contribution to the profit of the company. So product C is first place, product B is second place, and product A is third place in terms of contribution, percentage of contribution, percentage of PV ratio. Okay. Okay. Next one is cost volume profit analysis. How much cost I am spending to sell how much value of goods or volume of goods, and how much is their profit. If I increase 100 units from the existing unit of sales, how much is going to be the difference in the existing profit and the expected profit? This kind of analysis is done. That is called cost volume profit analysis. It can also be called as break-even analysis. How do I find out break-even point? I already explained to you what is break-even. Break-even point is a point at which level of sales? Break-even point is a level of sales at which the contribution is exactly equal to fixed cost, or the total cost is exactly equal to the sales. Variable cost plus fixed cost is equal to the value of sales. Okay. How do we calculate it? How do we calculate break-even point? Look at this equation. Break-even point can be calculated by applying this equation. Break-even point can be calculated by applying this equation. Total fixed cost divided by contribution per unit. Total fixed cost divided by contribution per unit. How do you calculate contribution per unit? Contribution per unit is nothing but selling price per unit minus variable cost per unit. All right. So that's the formula to calculate break-even point. Then break-even point based on total sales, we can compute fixed cost divided by PV ratio. It's not P ratio, it's PV ratio, profit volume ratio. Profit volume ratio. So management is always interested in knowing about how much should I minimum operate to reach out my break-even. So for that purpose, we can calculate. Next one is the management may also interested in knowing how many units I should sell to reach out a profit of X or Y. I want a profit of 1 lakh. How many units should I sell to reach a profit amount of 1 lakh? So for that we have an equation: fixed cost plus desired profit. Fixed cost plus desired profit, because variable cost already covered in the sales. Okay, contribution is after variable cost only, no? That's why fixed cost plus desired profit divided by contribution per unit. Contribution per unit. If I need a profit of 5 rupee, if I sell 1 unit, I can get a profit of 5 rupee. How much I have to sell to get this much amount of profit? So the equation is fixed expense plus desired profit. Whole thing divided by contribution per unit. If I do so, I'll get the amount of sales to be done to earn a profit of 10,000 or 1 lakh or 20,000 as the case may be. Okay. The next concept is margin of safety.
Sir, do we need to
What is
remember
margin of
all these
safety? The
formulas?
excess of sales over the break-even point is called margin of safety. How much you are safe? By how many units or by how much amount of sales you are safe? After reaching out the break-even point, how much you are in excess of break-even point? That excess is called as margin of safety. So margin of safety is nothing but the excess of actual sales minus excess of actual sales over break-even sales. The break-even sales is 1 lakh. If I really sell 1,50,000 units, I am safe by 50,000 units. Okay. Same thing can be computed by another formula: profit divided by contribution per unit, or profit divided by profit volume ratio. If you do this, you will get margin of safety. Look at this chart. I'm having a break-even chart for you. Yeah, this is break-even chart, break-even point chart. Break-even point is a point at which the total cost meets the total revenue of the company. Look at this point. This point is the point at which the total cost is reaching out or meeting the total revenue of the company. That's called break-even point. Okay. Let us take one small question. Look at this question. The small data. I'll just review this for you. Can you read the data? Can anyone read the example? This example. Can anyone read for the class?
Example, calculate break-even point
Yeah.
and draw the break-even chart from the following data. Fixed cost is rupees 2,50,000. Variable cost rupees 15 per unit. Selling price is rupees 25 per unit. Comment on the production level in units: 12,000, 15,000, 20,000, 25,000, 30,000, and 40,000.
Okay. Suppose this company is producing only 12,000 units, what will happen? And 15,000, 20,000, 25,000, 30,000, and 40,000. What will the impact on the profit of the company? Okay. For that, first you have to calculate break-even point. How to calculate break-even point? I told you break-even point is equal to
Fixed expenses divided by contributions.
yeah, total fixed cost divided by contribution per unit.
Yes.
Total fixed cost is there, 2,50,000. How do I calculate the contribution per unit?
Selling price minus variable cost.
Selling price per unit minus variable
Yes,
cost
variable
per
cost.
unit.
Yes.
Yeah. It's given here selling price 25 rupees per unit. Variable cost is 15 rupees per unit. So 25 minus 15 is equal to 10. So 2,50,000 divided by 10 is equal to
25,000.
units. Can anyone tell me how much is the what is the break-even point in value? What is the amount of break-even sales?
25 lakhs.
How much?
Not 25, sorry. 2,50,000.
How it is?
Because my fixed cost is 2,50,000. So break-even point is nothing like selling, fixed expenses equivalent to break-even points. My profit.
Anybody? What is the value? What is the amount of break-even sales? What is the unit of break-even sales? How many units should I sell to reach the break-even point?
2,50,000. Sorry, 25,000 in
25,000, sir.
25,000.
25,000 units. That's what we already called. Now my question is,
Okay.
what is
Then
the amount of sales? What is the amount of given sales? That's the question. What is selling price per unit?
25.
What is
50
the
lakhs.
point in units? Sorry?
50
6,25,000.
lakhs 25.
25 is into. Are you not getting? Are you getting confused?
25,000 units multiplied by 25 per unit.
That's it simple. That's it simple. Amount of price 20 okay. Am I audible to you?
So we lost you for about a minute.
Yeah, there was a problem.
Still breaking, I
Breaking
guess.
off.
See the screen? Yes?
Yes, sir. Screen is visible.
Yeah. So look at the statement. I have taken the production in units. I have taken the total sales in value. Then total cost. I'm going to find out the break-even point by trial and error method. This is the easy way. We have already found out 25,000 units. Now we are going to prove it by having a trial and error method. If I produce 12,000 units, for how much I can sell it? 12,000 into 25 rupees. The total sales is nothing but production in units multiplied by rate per unit, 25 rupees rate per unit. The total cost is nothing but variable cost. For example, to produce 1 unit, what's the variable cost? 15 rupees. So 15 into 12,000. 15 into 12,000 is equal to how much? 15 rupees into 12,000. 15,000 into, sorry, 15 rupees into 12,000 units is equal to 1,80,000 plus what is the fixed cost?
2,50,000.
2,50,000. Add that. 2,50,000. If you add, we will
4,30,000.
get 4,30,000. 4,30,000 here. Okay. That's the total cost. If you minus the total cost from the total sales, you will get profit. But that is in minus, so it's a loss. Similarly, for all the units, say for example, 15,000 units multiplied by 25 rupees selling price. 15,000 multiplied by 25 is equal to 3,75,000. Okay. Then again to calculate the cost, 15,000 multiplied by 15 rupees plus the fixed cost of 2,50,000. 2,50,000. How much? Plus 2,50,000. Are you getting 4,75,000? Yeah, 4,75,000. Similarly, you minus this 4,75,000 as a cost from the revenue, 2,75,000. Again, you are getting a loss of 1,00,000 rupees. Just like that, you do for all. At one point, you'll get 0 as your profit. That stage is called as break-even stage, break-even point. This 25,000 is the break-even unit. 6,25,000 is the break-even point in value of sales. Any doubt? You need not to calculate like this in the exam statement. You have to go by this equation. So this is the break-even point chart.
All this formula we need to remember, is it, sir?
Little louder. Somebody saying something.
All this formula need to be remembered.
Can someone else tell the same thing what he's telling? I'm not getting.
Sir, he's asking if all the formulas need to be remembered for the exam.
Yeah, formula you have to remember for the exam. So all of you please note down. I'll give you some data. You can try for break-even point calculation. Fixed cost is 1 lakh. Fixed cost is 1 lakh. Variable cost. All of you please note down. Fixed cost is equal to 1 lakh. 1 lakh. Variable cost per unit is rupees 20. Selling price per unit is rupees 30. Calculate break-even point. Break-even point in value of sales. Can you calculate and tell me? Yeah, are you getting the data? I typed it in the chat box also.
Sir, 10,000 units.
10,000
Units.
units. If you produce 10,000, if you sell 10,000 units,
There will be no profit, no loss.
is right. The total revenue will be 3 lakhs. Variable cost will be 20 rupees into 10,000 units. So that will be 2 lakhs minus 2 lakhs. Your contribution is 1 lakh. Fixed cost how much I told you? 1 lakh. Yeah.
1 lakh.
So there will be no loss and no profit. So the answer is 10,000 units. But my question is about calculate break-even point in value of sales.
Value. Okay.
Yeah. What is the sales value? Rupee. This is rupees. How much is the amount of sales? Amount of break-even sales. 10,000 is the unit. Yeah, that's it. 3 lakhs. 3 lakhs is the value of sales. Any doubt in break-even point? Okay, I'll give you another question. The management wants 2 lakh as profit. 2 lakh rupees as profit. How many units? How many units to be sold? For the same data, you can just add this one more point. how many units the company should sell to get a profit of 2 lakhs? Can you find out? Same data of the previous case. One more question is added. That is, how many units the company should sell to get a profit of rupees 2 lakh?
Sir, 30,000 units.
30,000
How many?
units, sir.
50,000 units, sir.
30,000.
30,000.
Yeah, how did you calculate?
We
Sir,
will
what we
add
did is,
cost plus the profit.
Fixed expense plus
Fixed
Go by
cost
some,
plus
go by
the
some
profit.
formula. Go by some formula. Easy calculation.
So fixed cost plus the profit
Yeah.
divided by the
Yeah. What is the fixed cost?
selling price.
fixed cost is 1 lakh
1
plus
lakh
2 lakhs profit, that is 3
plus
lakhs.
desired profit.
Yeah, that is 3 lakhs.
Desired profit. Whole thing divided by
That divided
unit
by
price.
Selling
10.
minus selling price minus
Selling price minus variable.
contribution per unit.
Yeah.
Fixed cost is 1 lakh. Profit is 2 lakhs. So total amount required is 3 lakhs. That should be contributed by the number of units. So contribution per unit is 10 rupee, right? So 10 rupee. 3 lakhs by 10 rupee. So number of units is
30,000.
30,000 units. That is only to be sold to reach out a profit of 2 lakhs. So this is how you have to calculate the number of units to be sold. Any doubt in this break-even concept, break-even point, costing?
No, sir.
Okay, I'll give you another question. You try. I'll share another file. Are you able to see another question? Illustration 4.
No, sir. Yes, we can see now. Yeah, we can see now.
Yeah. Please try this question. Did anybody get the answer? Somebody put a question mark, 2,25,000. Warren, what is the 2,20,000? Is it rupee or is it number of units? And another person who is selling 2,25,000 rupees. So
No
your
further
answer
question.
is different from any other answer? Not answer? The
4,50,000.
4,50,000 rupees. 4 lakh.
Oh, sales
50,000
minus variable cost. Okay.
4,50,000. Somebody told 2,25,000, somebody told 5,40,000.
Set cost by contribution.
What is the problem? What is the mistake?
Contribution into sales.
Fixed cost by contribution. So contribution is 2 lakh. Fixed cost is 1,30,000. 4,50,000. Or you can calculate contribution per unit. Here contribution per unit is not there, right? So you can take in total fixed cost and contribution into sales. Right? 50,000 is answer. Without this, okay, next question. Sales is 1,70,000 for both the company. Fixed cost is 85 for company A, 134 for company B. Variable cost is 34 for company A, 85,000 for company B. Without break-even point for both the companies. Can you quickly tell me what is the break point A and B?
Uh, 1,06,250. 1,06,250 for company A.
250 for company A. B.
Variable cost is 85 divided by 34.
Company B. 68.
Yes. My fixed cost 3,40,000.
Sir, can you move the cursor above for that chart table? Hello?
Company B, like 68,000.
8,000, right?
Yes.
Next question.
From the following, so is it equal PV ratio, given point. PV ratio contribution divided by sales into 100. PV ratio is 50% for illustration 6. PV ratio.
PV ratio how much?
60%. Sorry, 50%.
50%.
Yes.
Break-even point. No. So how much is the break-even point?
90,000.
90,000 rupees is the break-even point. Profit to earn. Okay, what is the profit? Existing profit.
$30,000 my profit.
30,000 rupees is the profit. Yes. Margin of safety.
Margin of safety didn't get professor formulas.
So what is the margin of safety? Is it 60,000?
Yes, sir.
Yeah. The last question is how much I have to sell to earn a profit of 60,000? How much I have to sell to earn a profit of 60,000? Please calculate. That's the answer. Anybody got it? Those who are not able to find it, if you have any doubt, I'll stop and explain to you.
Yes, Professor, can you please explain it?
Yes. Sales to be on, sales required to earn a profit of 60,000 is 2,50,000, 2,10,000. What is the next one? Seventh one, please try.
PV ratio 40%.
40%. Yeah, 40% PV ratio. Correct.
Compressor.
The given point is 8,500 units.
Just go up no, for the illustrations so that we can work on it. No, still we are not able to view the illustrations.
Okay. So I share this file. There are so many other questions you can practice later.
Yeah, fine.
Yeah. Any other doubt? How the assignment is going on? Many of you are still waiting for the last minute of opening a link in the LMS. Opening link in LMS is just to get your assignment, description, everything I already told you in the class itself. But anyhow, and again somebody is asking yesterday in the group some doubt. Please do it fast.
Sir,
Yes, madam.
date extensions.
Yeah.
Sir, last class he told the due date is 25th, and just when I was checking LMS in Friday, the due date is mentioned in 9th, so a little bit upset on that one. The due dates on assignment.
Any difficulty? Any doubt?
It's not doubt, Professor. In mid, we received for HRM and OT for 15th. So we plan to work on that one. So last class he told in 25th. So what I felt, so we have some time we can go through.
We want time.
Yes, sir.
Yes.
When is the last assignment due for you?
20th.
Huh?
28th for OT.
20?
20th. 20th.
20.
Yeah.
20 is the last date for your some of the assignment, last assignment.
Yes, sir.
Yes, sir. Yes, sir.
Beyond that, no assignment due. 20th is the last assignment date.
Yes, sir.
Yes, Professor.
Okay, take 21st for us.
Okay.
Professor.
21st.
Professor, make it 25th, can you?
25th. How does it matter for you? 4 days.
No, we will do it. Professor, we'll try to do it and give it to you this week itself. We'll try to give it to you this week.
Once again, if you take today is the announcement of assignment date, you have another 10 days. I mean,
3
yeah,
days, sir.
15 days.
Professor, we have other assignments. We have work.
Submission by 15.
Of course, we have.
But
But
Professor,
I'm not
you
affordable
agreed
if
on the
college is
20th.
asking the mark before 21st or on 21st. Assuming that 20th is the last date for giving assignment. Okay, I'll adjust. 25th is the last date. You have to submit without fail.
Thank you, Professor.
Thank you so much,
Thank
sir.
you, sir.
Thank you so much.
Any other
Sir, you
matter
will
of concern?
Sir, you will update
Give
that
some
on the
inputs
LMS.
about examination.
Yes.
Sir, will you update the new date on the LMS?
One in elements.
Yes, sir. Otherwise, it will show a red mark.
Submission, sir. Yeah.
No, I'm not getting. Madam, can you please tell what he's telling about?
Sir, on the LMS, could you change the date for the submission because it currently says 9th? Yeah. So
Yeah, if it is 25th, yeah, of course, LMS also will be showing 25th only.
Oh, okay, sir.
I will change it.
Okay, thank you, sir.
Want it to be done immediately? Give me some time, I'll do it.
Sir, can you give some inputs about examination, sir?
I'll do it. Huh?
Sir, if you can give some inputs regarding the examination, how would the paper be?
Yeah, I think we have another class also, no? One more week. Or is the last date?
I need to check.
If it is one
No,
more
we
week,
have
I'll
one
give you
more.
the
Yes, sir, we have one more class.
Okay.
Sir, if you can give overview, then it will help us, sir. We have, I think.
Sir, your voice is very much less invisible. Anybody can.
Sir, the class wants an overview on the syllabus. So,
Class?
syllabus, sir, I mean like the pattern of the exam.
Syllabus is there, no? Syllabus is there in LMS and previous year question paper also is there in LMS.
Sir, we are not able to access it when we go to the model question
Okay,
paper,
okay.
right?
Let me
It's
check it.
yeah, the Google Drive.
I'll tell to office to give you access.
Okay, thank you.
Yeah. Syllabus is there in LMS and all the course materials are there. Yeah. Any other matter of concern?
Sir, on the assignment 2, it's mentioned we have to prepare a ratio analysis of the listed companies. Any specific number of companies that we have to take?
Anybody can answer for this question?
Yeah, it is there in Google, so you have to search update
no.
NSC, BSc listed company.
That I got it. That
Yes,
I
yes.
got. I'm not talking about the company. I'm like just one ratio analysis of
One company and
One company.
two financial years.
All right. That yeah. Cool.
Okay.
Thank you. Yeah.
You got the madam? You got the madam? You got it? Excuse me.
Yes, sir. Yeah.
Sir, you have not graded the first assignment. First assignment.
That
gradings.
is not graded for all. After all the things are graded, I'll release it by tomorrow. You can expect.
Sure, sure, sir.
Yeah.
Professor, I have small doubt on. I have downloaded the TVS company's balance sheet and profit and loss. So I have small doubts. So when I have time, I can call and connect you on that.
Yeah. If you have any doubt specific to the balance sheet and everything, you can call me. You can ask now itself. We have some time so that others also can understand.
Sir, I did it like I thought it is like balance sheet and profit and loss of two different companies and that ratio analysis. I did it that way. Is it?
No, Sanjana. See, actually, it's a one company. If you download the report, you will get like 2-3 years reports in balance sheet as well as for P&L.
Okay, so it's a comparison of
yes, exactly.
Financial years of the same company.
Correct.
Okay, yeah. Thank you.
Sir, can I ask a quick question on the balance sheet?
Yes.
How to find out cost of goods sold from a balance sheet?
Cost
And a
of
profit
goods
and
sold, you cannot find out from the balance sheet. You can take the sales. Why do you want to cost of? Okay, to calculate gross profit ratio.
right, sir. Or turnover ratio.
See, turnover ratios, you can take sales as a variable instead of cost of goods sold. But to calculate GP ratio, definitely you need cost of goods sold. Try
Right.
to find out from the notes. Note to accounts will be there.
Okay.
From there, if you are able to find out, take that.
Okay.
In older format, it is evident, but now in the new format, cost of goods sold not specifically given. Try to the maximum level. Otherwise, you can ignore that particular ratio.
So what happens is cost of goods sold, direct taxes, direct expenses we should take, but sometimes that is not available because it
That's what I'm telling. The older format was clearly given, but in new format they are hiding it. They cannot find out easily the cost of goods sold. So you check it if possible, otherwise you leave that ratio.
Okay, sir. Got it.
Any other doubt? Is the assignment date changed on LMS? Anybody can check it and let me know. Assignment date. Is it changed?
Yes, sir, it is changed. It is changed to 25th September, Saturday.
That is fine.
Thank you, sir.
Any other doubt? Today's discussion, cost sheet, costing, marginal costing. Okay, if you don't have any other doubts, so we can leave now. We can meet in the next session, but
Hello.
please concentrate on the assignment,
Sir.
submit it. If you have any doubts, you can call me and ask.
Excuse me, sir.
Yeah, yes, sir.
Sir, it is September 25th, 12 a.m. That is 24th night.
Arey Baba,
Fine,
okay.
Harshit.
I know because Friday most of us will be working.
20 AM is there. Okay, let me check it, but you prepare for that.
Sure, sir.
Yeah.
But thank you, sir, for the few days that
Yes,
you have given.
thank you.
Thank you, sir.
Thank you so much.
Yeah, bye, sir.
This evening. Bye-bye. If
Bye,
you
sir.
have any doubt, stay back and ask me, otherwise you can.
Thank you,
Thank you,
sir.
sir. Bye.
Thank you, sir. Bye, everyone.
Sir, can you hear me?
Thank you all.
Sir? Sir, can you hear me?
Yes, yes.
Sir, for this assignment too, sir, can we, does it have to be a registered company only, or is it okay if we can take a small firm or something of that sort? Did the balance sheet in the P&L?
Little louder, little louder.
Sir, can you hear me, sir?
But less voice is there. Okay, little louder you can tell me, yes.
Now, is that better?
Yeah.
Okay, so for this assignment too, is it have to be a registered company, like a big company, or even a small firm is
Any
okay?
company listed in stock exchange, that's it.
Okay, big company listed in stock exchange.
Any company.
Okay.
Listed companies.
Okay. Okay.
Yeah, any listed companies in India.
Okay. Okay, sir. Thank you.
Okay.
Professor, can I share that balance sheet which I downloaded from TVS? Just I want to ask the net income where I will
You
get
want
it.
to share the balance sheet what you downloaded?
Yes.
For what purpose?
I have to ask few questions in profit and loss because I'm in clear with balance sheet items, but I have some doubts in P&L. That's why.
What is that?
The net income I'm not getting in that one. That's why.
Net income.
Yes.
Net income is your net profit is the net income.
Yeah, I'm not getting in that P&L.
Net
Just
profit will be there now in the profit and loss account.
yeah.
Net profit after tax, profit after tax will be there.
Yeah, I checked, but I didn't get.
Show me.
Maybe I had just. Can you give access for screen? Share my screen.
I do. Give access. What's your name?
Murugeshan.
Yeah. Now we check.
Yes, I can.
What is this balance sheet? Previous motor
Yeah.
company.
Yes. Yesterday when I was checking, so I didn't get more than page number 163. Just for this, I am clear, Professor, for the balance sheet. And if I go for P&L, here they have mentioned profit for the year. After that, they have mentioned some comprehensive income.
That you don't take it. Only 9th item, profit for the year. That is the net
Yes.
profit.
Then I am clear with the point, Professor. Thank you. So thank you so
Anything
much.
else? Anybody? Okay, thank you then. See you all.
Thank you, sir. Have a nice.
Thank you.
Thank you, sir. Have a nice evening. Take care.
Thank you. Nice evening. Bye. Yes, Rupesh.
Thank you, sir.
Thank you, sir. Thank you, sir.